Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is, as always, Snehi Shah, and this is the show where we get you all the buzzes in trade, either on the back of news flow or on the back of technical charts. But first up, let's see how the market is really shaping up. Not looking very good for the Nifty because we managed to recover and then just see the nosedive that we are seeing right now in trade. In fact, we are down almost 58, quarter of a percent. We are down on Nifty, but Nifty Bank is where the outperformance continues. In fact, it's a one-way street for Nifty Bank. No selling coming in on the rise.
Absolutely, it's the way the market has been since morning for Nifty Bank. We're seeing some up and down on Nifty 50, but one way up street, like you mentioned, for Nifty Bank, 7% higher is where that index is right now, firmly led by IndusInd Bank. We'll talk about that in the show as well, why IndusInd Bank is in focus today. But the gains on IndusInd Bank keep continuing, and on the back of that, Nifty Bank is holding up very smartly, and similarly for Axis Bank as well. But coming again to the Nifty, a 0.2% cut is what we're seeing. We had across the 23,300 mark. In fact, 330 were the levels that we had crossed. Now we have receded once again below the 23,300 mark. So quite the up and down happening in our markets for today, and as of now almost at the day's lowest point is where we are at when it comes to Nifty. Similar for Sensex as well, continues to languish, 0.2% cut coming in for Sensex as well today. India Wix is lower by 2%. At least that is looking good for our markets. However, despite the volatility, the advanced decline ratio stays in the favor of the advances today. Some 1,700 stocks in the green compared to 950 in the red. That's what the ratio is shaping up to be right now. From the Nifty pack, like I mentioned, IndusInd Bank, Axis Bank, Trent, HDFC Life, ONGC, Apollo Hospitals, Asian Paints. These are the stocks that are holding up the Nifty firmly. What's causing some pressure on the Nifty on the other side is metals. From metals, you have Hindalco, Auto in the red right now, Maruti Suzuki, you have Bajaj Finance, along with IT also in the red, Infosys, Hero Moto, Adani and JSW. These are the top Nifty losers. Sectorally, PSU banks are outperforming the market, a 1.5% uptick coming over there, followed by Nifty Bank, FMCG and Energy. On the flip side now, you also have Realty that has slipped into the red, so a 0.1% cut coming in on the Nifty Realty Index. DLF Godrej Properties are the stocks that are dragging the index lower. Followed by that, you have Pharma, IT, Auto and Metal, that's in the red, and Nifty Metal, the top sectoral loser today. A 1% cut coming in on Nifty Metal on the back of names like JSW Steel, Tata Steel, Vedanta, Hindustan Zinc, Nalco, Hind Copper. All of these are in the red. Basically, that is what the market is shaping up to be like right now, and stock-specific action, we'll tell you on the show why each stock is in focus, and let's get kick-started on that note.
Alright, so that's how the market looks like for now, but we are now joined by Nagaraj Shetti, who's the technical and derivative research analyst from HDFC Securities on the technicals, and from our research team we have Rabinder and Gaurav. Hi, good afternoon to all three of you, and thank you so much for joining us on the show. Let's kickstart the show then with the IT major that's all set to report its Q4 numbers, and that's Wipro. Now, what we're expecting from Wipro is that there could be a softness in the top line with weakness in manufacturing and large orders along the European region. We also feel that the margins could moderate, but the wage hikes are fully absorbed in Q3. And the revenue growth guidance is likely to remain unchanged for Q1 of FY26 estimate. It could be likely between minus 1% to 1%. Now, the guidance for Q4 was at the minus 1% to 1% in constant currency terms. Now, let's look at what the numbers could look like. Q4 consolidated quarter-on-quarter numbers are for the IT service revenue could be at $2,597 million, which is a downtick of 1.2%. The total revenue could see an uptick of 1.5%, and on a quarter basis, the constant currency growth could be between minus 0.6% to 1% to 1% in constant currency terms, like I mentioned. Also, the IT service margins are likely to be at 17.3% versus a 17.5%, which is a downtick of 20 basis points, and the PAT is likely to be down 2.3% from 3,290 crores from an earlier 3,336 crores. So that's what we are penciling in largely on Wipro, or rather subdued number coming in on Wipro, but nonetheless the stock is up 0.4% before the numbers.
Okay, numbers just around the corner a few hours away for Wipro, and that's how the stock is reacting before the numbers. Nagaraj, coming to you. Hi, good afternoon and welcome to the show. The first stock that you've picked out for us is MRPL, Mangalore Refinery. Now, after a continuous period of sharp correction, last 1 month itself, the stock is up anywhere between 18 and 20%. Do you believe that this is just a knee-jerk reaction to everything that's been happening, since fertilizers are largely safe from everything that's been happening globally, or do you also think that this is sustainable on the charts given the kind of correction the stock has already seen over the last 6 months or the last 1 year as well?
Hi, good afternoon, Snehi. Rightly said, the market has been, this stock has been in a downward correction over the last many months, and recently at 100 levels, it formed an important bottom reversal and shot up sharply last few weeks. Currently, this chart pattern is suggesting that the bullish upside breakout of bullish flat pattern around 138, 140 levels, and overall chart pattern is looking positive. I'm expecting upside breakout from here onwards, and the next overhead resistance to be watched is around 150 levels in the near term.
Okay, so that's the take coming in on MRPL. Let's talk about another stock that's in focus, and that's IndusInd Bank today, top nifty gainer, and for good reason. The shares of this bank have been gaining after the bank received the findings of the external audit on the discrepancies found in its derivatives portfolio some time ago. The report by the external agency showed that around 1,979 crore rupees of negative impact to the net worth of the bank due to the derivative discrepancies can be accounted for. Now, based on this report, the bank said that it had assessed an adverse impact of 2.27% of its net worth as of 2024. The impact is lower than RBI's assessment of approximately 2,000 crores. Now, while the lender's internal audit has estimated an adverse impact of 2.35% on the net worth, the external agency report puts that number lower by 8 bips. So the external report, it explains how the kind of loss that they are expecting on account of the discrepancies in the derivative portfolio is lesser than what the bank had earlier accounted for, and that is a ray of positivity coming in for IndusInd Bank today. On the back of this, brokerages have given their verdict. Morgan Stanley maintains equal weight, but and the target price is maintained at 755. Macquarie maintains outperform, target price at 1,210 rupees per share, and Citi maintains a buy with a target price of 890 rupees per share. On the back of that, IndusInd Bank is gaining with gains of more than 5.5%.
All right, that's IndusInd Bank up and away in trade. But Nagaraj, you've also picked out a banking name for us. That's Indian Bank. That's also up 3.9% in trade today. Tell us, what do you see on the charts for this one? Now, all the banking names are doing pretty well for themselves, especially the PSU pack. In fact, this one has also been an outperformer in the last 6 months. Tell us, what do you see on the charts? Do you see the up move continuing from here on?
Yeah, currently showing a consolidation pattern over the last 2-3 weeks, and repeatedly testing the hurdle of around 560, 570 levels. Today's outperformance again violated that hurdle around 560 odd levels and moving up. The chart pattern is looking positive. It has crossed the important moving average supports recent resistance and closed higher recently. And the volume pattern during the upside breakout in the RSI is indicating more upside is likely for this bank, Indian Bank, in the next 1 to 2 weeks. So next overhead resistance to be watched for this stock is around 580.
So the levels to watch out for on Indian Bank. Gaurav, coming to you, Vedanta is a stock that you've picked out for us. Some major news flow is what we've been hearing ever since market close yesterday for Vedanta. Tell us what it is.
Well, yes, Vedanta is in focus. Reason being down now, Cairn Oil and Vedanta has now acquired 7 new blocks at OALP round 9, which was already in the buzz, and with this they are also gearing up for the rapid expansion in the west coast of India. Now what company has said is that this is actually a largest private player to win the block at OALP, and at the same time, with this addition of the 7 new blocks that they have got, the company has now total increased their block size to 69. It will be spread across 73,000 square kilometers, so it is a very big news for Vedanta. On the other hand, Cairn and Vedanta, they both hold around 100% participatory interest in OLP blocks, and management has also said that this is actually in line with the strategy to contribute around 50% of the domestic crude production in India, and at the same time this will also enable the company to invest in increasing oil gas exploration and production in the west coast. As a result, when we talk about the stock performance also, although it is not performing in a positive way, but definitely on the back of this we are watching out on Vedanta.
Alright, moving on from Vedanta to the next count, Nagaraj, again a banking name. You picked out Axis Bank, again a higher flyer in trade today. Tell us, what do you see on the charts for this particular counter? This one has really picked up pace in the last 1 month. What do you see from here on? Do you see this up move to continue?
Yes, rightly said. It has likely to potential to continue its up move. The chart pattern is indicating that it has been in a constant uptrend over the last a few months. You can see a high tops and high bottom. The chart is indicating the a strong momentum building up over here. So I'm expecting this stock to move further, and 1240, 1245 is going to be the next level where the next hurdle placed in.
All right, moving on then to the next counter which is in focus today, and that is JSW Steel, and it is in focus on the back of the fact that it is considering an investment of up to 50,000 to 60,000 crore rupees over the next 3 to 4 years to scale up the green steel production aimed at export in Europe. That's the word coming in on by Sajjan Jindal, who's the group chairman, and also the company's bold push towards sustainability comes at a time when several global firms are scaling back green initiatives, following a policy shift in the United States. Now, the expansion is expected to take place at the steelmakers' Salab unit, which was recently handed over to JSW Green Steel. And on the back of this big, huge investment over the next 3 to 4 years, JSW Steel is in focus today. It was trading up in the morning, but it has given up those morning gains. Is now currently reeling under selling pressure of 1.2%.
Okay, so JSW Steel in the red right now. Rabinder, coming to you. IREDA is the stock that you've picked out for us. Earnings candidate numbers came out post-market yesterday. Tell us what the numbers look like.
Well, IREDA is in focus on back of Q4 number where a company NI saw a uptick of 58% year-on-year basis from 481 crore to 758 crore, and PPOP saw uptick of almost 41% year-on-year basis. And if we talk about PAT, then PAT also saw a good uptick of 49% year-on-year basis from 337 crore to 501 crore, and outstanding loan book was up by 28% to 76,282 crore. And if we talk about NIMS, then NIMS saw a decline from 3.33% to 3.27% quarter-on-quarter basis, and GNPA also saw a decline of from 2.68% to 2.45% in quarter-on-quarter basis. So back of this strong Q4 number, stock is up over 6%.
All right, speaking of IREDA then, that's trading with gains of 6.4%. Pradeep Kumar Das, who is the CMD of IREDA, said that the growth trajectory for the company is steady, and he is also discussing the examination of SEBI restrictions on Gensal Engineering. Let's go across and listen in to what he had to say.
Growth is just automatically happening. Only thing, we have to maintain the discipline and fundamental soundness in our approach with respect to corporate governance, with respect to loan management, which we are regularly and consistently working on it. Whatever is with respect to Gensal's issues, already SEBI has initiated one investigation, and they have submitted yesterday some report that is available in the website of SEBI. And we are also, as a lender, we have also initiated our process of examination. As per the RBI norms, whatever investigation is required, we'll be doing. And one thing I can assure, that we'll be taking the most appropriate action.
Okay, that's the word coming in from the management at IREDA. But let's move on. Nagaraj, you've picked out Engineers India for us on the charts. Today the stock is up and away 7%. Last 1 month also the stock has done pretty well for itself. A 14 to 15% gain coming in. But all of this even after all of this, the stock is still flat on a YTD basis. Are you seeing some improvement on the charts for Engineers India going ahead, and the recent rally that we've seen? Do you see that continuing on the charts?
Yes, I'm expecting important bottom reversal confirmation recently, and the stock was in a downtrend over the last 7-8 months, and is at the lower levels of around 140, 150 levels. It formed a bottom reversal and broken above. Currently, it has moved above the hurdle of downsloping trend line on the weekly chart, and also a resistance of weekly 10 and 20 period AMA. The chart pattern is indicating more upside towards 200 levels, where the next resistance could come in.
So that's the take on Engineers India. Let's move on and talk about another stock that's in focus, and this on the back of its earnings is ICICI Prudential. Rather good set of numbers is what the company has reported for Q4. The company's net premium income for the quarter grew 11% on a year-on-year basis to 16,369 crore compared to 14,788 crore on a year-on-year basis. Product mix change supported their VNB margins this time, which came in steady at 22.7% compared to 21.5% this time last year. The management anticipates that VNB growth in FY26 will be driven by linked products. Projected that value of new business growth will outpace APE growth in FY26 as well. On the back of these good set of numbers, we have brokerage verdict coming out, and Nuvama has upgraded the stock to a buy rating from hold, but they've cut the target price to 680 rupees. Nomura maintains its neutral call, target price at 650 rupees per share, and Morgan Stanley has maintained its equal weight call, target price has been reduced to 600 rupees per share by Morgan Stanley. So that's a take coming in on ICICI Prudential. Good numbers, beat street estimates, and the stock is up 3% as we speak.
Alright, that's ICICI Prudential trading with gains of 3%. But Gaurav, coming to you, Symphony is the name that you have picked out for us. Tell us what's the news flow here?
Focus because now company has undertaken a strategic initiative to enhance its capital efficiency. What company is doing is that they have approved divesting stake in two of their subsidiaries. First is Climate Technology, which is situated in Australia, and second is IMPCO, which is situated in Mexico. Now this monetization is going to happen, and this will the company is expecting consolidated performance to improve along with the ROC of the company. On the other hand, there is another news flow which is coming up from the company itself. GSK China, which is one of the subsidiaries of the company, will also sell its tech and IPRs to IMPCO, which is situated in Mexico, for a consideration of around 44 crore rupees over the next few quarters. Now with this, GSK China will also repay its debt to Symphony India, which will also be another support point for the company. But on the other hand, when we talk about Nuvama, they have given their take. They have actually maintained their reduced rating at a target price of 1100 rupees. What they're saying is that the focus is definitely going to be on efficiency, which is actually a positive thing. But from here on, the boost and diversification holds actually the key to become constructive on the stock, and that is the reason why they are still not bullish on the stock. As a result, when we talk about stock performance also, it is down 1.5%. So definitely watching out on Symphony and how they execute the entire plan that they have managed to present in front of the audience.
Okay, so that's the reason why Symphony is in focus. Nagaraj, coming to you, L&T Finance is the stock that you've picked out for us. It's not done anything at all. In fact, year to date, it's looking good, but this also after a cut of almost 5 to 6% in the last 1 year. The last 6 months as well, the stock is lower by 5%. What's the outlook on the charts going ahead?
Yeah, in the last 5-6 months, this stock has been forming a rounding bottom type pattern at the higher levels, and 130 seems to have made a important bottom reversal. Currently placed at the higher levels, neckline of around 158, 160 levels. Once it breaks above 160, I'm expecting a upside momentum to take place in the stock price, and that would pull the stock towards 170, 172 levels, where the next lessons could come in.
Then from L&T Finance, Rabinder, you've picked out NBCC for us. Tell us what's the news flow on NBCC?
Well, NBCC is in focus, where Chairman to ET Now has said that the NBCC has brought forward its target of achieving 25,000 crore revenue by FY29 beyond its negotiation for redevelopment of project across the country, and NBCC will follow the Delhi model, under which it has sold 3.2 million square feet of commercial space at the World Trade Center project in Nauroji Nagar and Sarojini Nagar downtown, generating a 14,800 crore to complete the redevelopment of 7 colonies in Delhi. And companies in talk with the state government like Goa, Telangana and Jammu and Kashmir and Kerala to take up more redevelopment projects, and the redevelopment project is going to contribute almost 50% of the company's revenue. So back of this news, stock is up over 6 to 7%.
Okay, that's the take on NBCC. I mean, that's the news flow. But Nagaraj, coming to you, NBCC on the technicals is also something that you've picked up. Last 6 months, the stock has seen sharp correction, but last month, the stock has done pretty well. It's been recovering over the last 3 months and 1 month as well. Last month as well, pardon me. So what's the outlook on the charts going ahead? You believe that the worst is behind this stock now?
So the recent corrections have not damaged the underlying trend of the stock price. It has bounced back from 70-75 levels after dipping into it. Currently showing a sustainable upside bounce above the hurdles. I think the upside momentum is likely to continue from here onwards. 102, 103 is going to be the next resistance in the near term.
All right, moving on then from NBCC, Gaurav, you picked out ABB for us. A brokerage note coming in there. Tell us what does the brokerage note say?
The reason being that now Motilal Oswal has reiterated their buy rating at a target price of 6,700 rupees. What they have penciled in their note is that they are expecting inflow and execution for ABB India to ramp up after a few quarters. Other than that, what they have also highlighted is that the stock has actually corrected in the recent past, which actually gives another chance and opportunity for investors. What they say is that this weakness and the current trading price, when we look at the price to equity of 48.2 times on CY26 estimates, it is actually at an attractive level. ABB India also expects PAT to marginally be broadly around 12 to 15% going forward, which is actually a positive thing. And other than that, what they're also saying is that the margins are likely to remain elevated. And lastly, they have also said that it is well placed when we compare it with the peers. So that is the reason they are being a little bullish on the company with a target price of 6,700 rupees. And after this bullish note, we are also seeing some uptick in the stock price. So definitely ABB India is on watch list on the back of the positive note.
ABB India and focus, but let's shift focus from stocks right now and talk about the FMCG space. You have two major counters from the FMCG space right now that are feuding with each other. That's Honasa Consumer and HUL. They are battling it out over claims about copied products with hoardings about the products being placed next to each other. My colleague Anjali Palod has more details on the origin of this social media and ad campaign battle between the two FMCG companies right now. Anjali, take it away.
That's right. The Honasa Consumer co-founder Ghazal Alag has alleged that HUL has copied its various products. Now, Alag has compared the launch dates of various products in a side-by-side comparison in a social media post. Now, these products include sunscreens, face washes, as well as shampoos. However, Ghazal Alag later deleted this LinkedIn post. Now, it all begins with an ad campaign that was launched by Hindustan Unilever for its brand Lakme, and in this ad campaign they said that online best-selling sunscreens do not live up to their claims of delivering an SPF of 50. SPF, or the sun protection factor, is a measure of the efficiency of a sunscreen, and so HUL has claimed that brands do not follow strict sunscreen testing regulations, and they refer to an online best-selling brand in their comparisons. Now, HUL responded to this by putting up a hoarding right next to HUL's, and this hoarding was for its brand, the Dermaco. Now, in this hoarding, Honasa congratulated HUL for adopting the SPF testing standard that the Dermaco had always been following. Ghazal Alag, after this, posted on social media that large traditional brands had become complacent, and that brands like Mamaearth and Dermaco were forcing FMCG giants to adopt cleaner beauty products and also better testing standards. Honasa Consumer, which owns the brands like Dermaco, Mamaearth, Dr. Sheth's, has claimed that HUL has copied various products that were first launched by them.
All right, that's the battle that's heating up between a startup and an incumbent brand, and here are the startups that are giving tough competition to some of the large legacy brands like HUL with their product line and advertising. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we're getting you some more buzzes in the trade.
If you like this video, then like, share and subscribe to ET Now.